What's up, everybody? For those of you who are new here, welcome. If it's your first time seeing my content, hello. Thanks, babe. If this is your first time seeing my content, great. Hello. My name is Markia. I'm known on social media as the Money Plug. I'm a board certified credit repair specialist and credit score consultant. I didn't know it does that. Okay. And I use my social media platform to educate you on how to do this yourselves, right? How to fix your own credit, how to build your own credit, how to pretty much use your credit to kind of elevate your quality of life and stuff like that. It's been a minute since I've been live. I've been really, really busy. But I really wanted to go live today. I have no idea why the TikTok live cut off. I played no part in that. Let me see if I can get it back up. Oh no, I hate that TikTok cut off. Let me see. Live. Oh no, it really cut off. Okay, let me see if I can reset this. Copy, edit, add a new destination, custom. We'll see if I can get TikTok back up. So pretty much what I'm going to be doing today is, for those of you who don't know, I give free workshops once a month, or at least I try to do them as often as possible. And so with these lives, with these workshops, I pretty much I'll try to tailor it to the audience that I'm speaking to at the time. Usually it's like, oh, I'll do one for service members. I do one for the guys. I do one for the ladies. All right, we're back up on TikTok. Thank you, Jesus. Okay. So I'll try to cater them to the audience that we're speaking to. So today, in honor of Memorial Day, I'm going to be going over some stuff that's typically for my military people. It will be recorded. So if you can't stay the whole time, or if you're not the military person and somebody else should be listening to this, please feel free to share my content with them. If you're on Instagram, you can click the link in my bio and that'll take you to my website that will kind of show you all of my links. And if you guys are on anything else, you should be able to see the border around me. And I try to put as many of my social media platforms as possible for you guys to get in contact with me. If you are watching this on YouTube, hey girl, hey, it will be available for you to watch there once the live is over, as well as in the Facebook group and on my Facebook page. I try to put it as many places possible. That's probably why TikTok was like, girl, you're doing too much. But again, today we're going to be going over the Servicemembers Civil Relief Act. And pretty much what that is it provides a lot of protections for people who serve in the military or are getting out or have gotten out, as well as the SCRA provides some perks, right? So like it offers protections, but it offers perks as well. So I'm really excited to kind of go over this with you guys today. As always, if you guys have questions while we're going through it, please do not hesitate to type them in the comments and I'll answer them. If you're watching this directly from my Facebook page and not the Facebook group, I will not be able to see your comments. You'll have to enter the live from the Facebook group in order for me to see your comments specifically. I don't know why Facebook does that. If you're on Instagram, please put your comments in the bottom. After the presentation, I'm going to be answering all kinds of credit questions. So if you leave and come back, that's also perfectly fine. I'm not going to like go crazy if that's what you do. As a matter of fact, I'm waiting for somebody specific to log in. So if you guys got any questions, I can answer them in the next couple of minutes or so. Yeah, if you guys got any questions, it doesn't have to be military related. I can answer them real quick while I wait for somebody to log in because I really want to make sure they catch it before we get started. So you guys got any credit questions I can answer for you guys? Let's see. I'm just so grateful for you and people like Sean and I love all things. Okay, because listen, when you start getting into your own personal credit, especially once you start seeing like progress, you get obsessed, and then you get obsessed with telling everybody everything that you know because you're so excited and you're so happy about it. You just love it so much because you're finally seeing the positive side of it. Because if you think about it, when you got bad credit, you don't want to talk about credit. You don't want nobody bring credit up. That's why a lot of people don't talk salaries or don't talk money in general. It's because they feel really uncomfortable, right? Because they don't really understand the positive side. But once you kind of get over that hump, especially educational wise, like once you actually understand how everything works, you just want to tell everybody. We the wave, tycoon. What questions y'all got for me? Y'all don't got no questions? What? Stop playing. None at all. Whoops. Sorry, I was laughing at my kids. All right, let's see if I can share my screen and then I'll go ahead and get started then. Let's see. Okay. Go back to this one. Oh, I'll take this off. Share. Oh, I didn't even know I could do that. All right, let's see if we can get this going. All righty. Oh, it does work. Okay, so wait. This is actually pretty cool. Wow. Perfect. Okay. So this is a presentation that I usually give. I know it's not in my presentation form. However, I really, like I said, I just really wanted to kind of give this to you guys. So again, Instagram, you guys are not going to be able to see me and it. But what I will do is turn the screen around so that you guys can see the slides. Alexa, make an announcement. Hey, you guys are way too loud. Chill out. All right, so let's see. Let's see if I can turn this around. Okay, Alexa, go on Do Not Disturb mode. All right. Okay, can I do this? Okay, yes, I can. So, okay, so it's gonna fall, girl. Don't fall. Okay, so now everybody can see the screen now. My baby's graduating Wednesday. She's excited to start her financial journey, but doesn't know if she could apply for her student loans or a credit card first. Please help. Okay, so no, this is not gonna stay. All right, Instagram, so I'm gonna have to be as descriptive as possible because it's not gonna let me do this. Okay, so for your baby who's graduating, and for anybody who's looking to build their credit and don't really know kind of what to do first, or for those of you who have children who are graduating, it really depends on what her goals are, right? So if she gets a credit card right now and she's starting school in the fall is actually a lot closer than you think. So getting a credit card won't boost her score as much as you would need it to if she has bad credit. You really can't go wrong either way. However, if her education is her top priority, then I would start looking at student loans and things like that. Now, if your daughter doesn't have credit or has bad credit, obviously you're going to want to start adding accounts to her profile that could at least help. Now, credit cards, though, I'm real iffy when it comes to college students and credit cards right out the gate, unless you can guarantee that she's extremely responsible and has consistent enough income to kind of cover that responsibility. Now, there are accounts that she could add that won't necessarily do too much damage or honestly any damage at all. These are those 3 accounts. I don't know how long you've been following me, but I did a video for the Stranger Things release that talked about the 3 stranger ways that you can build your credit. One of those things was prepaid credit cards. That's not necessarily what they're called, but that's what I refer to them as. These are cards like the Chime Credit Builder card, the Credit Sesame Cash card, and the Extra Debit card. These cards specifically add on-time payment history to your credit report without really any risk. When you apply to it, there's no credit check. There's no fees because you're not borrowing anything. There's no interest because you're not borrowing any money. It's literally a debit card. You add money to the account and then your child would, spend whatever's in the account, or they can add money to the account and spend whatever. And the month that they use the card, that month it will report on-time payment history to the credit bureaus. So that is one of the reasons why I love that particular style of card, especially for like my college kids, my high school kids coming right out the gate, entering the world of work, because it's low responsibility yet high reward, because payment history is 35% of your credit score. So the more accounts that you have reporting good payment history, the better your score will turn out. But whenever you're building your credit, it takes time. Adding a credit card that following month, your score isn't going to go up. It's actually going to go down because you're introducing a new line of credit to your credit profile. So with the fall being right there, I personally would focus on student loans, but sit down with her, talk to her, and kind of see where her goals are. Where does she currently sit? Pulling your credit report will kind of give you a better idea of where are you now? Where do you want to be before it's time to start school? You obviously want to be in a good place before you start applying for student loans, because that's going to determine how much you're approved for, what the interest rates are, and things like that. But at the same time, you really don't got that much time. So at the end of the day, it's all about preference. But there are a lot of ways that she can still build her credit even after she sets up her student loan situation. That was a good question, though. I really like that question. Okay. All right, Instagram. I'm going to have to be as descriptive as possible because I couldn't turn the camera around. So this, like I said, this is a presentation that I typically give to military, simply because I'm military and I do a lot of giving back to the different units and communities and stuff that I'm a part of. And so this particular presentation, we talked about what is credit. the Servicemembers Civil Relief Act specifically, and then we talk about credit building. So honestly, anybody can watch this live, anybody at all. The only part that might not pertain to you is the middle, and that's fine. Like I said, if you don't stick around the whole time, the live is recorded. You guys can come back and watch this at any time. It'll be saved on Instagram, YouTube, as well as Facebook. So there's so many places that you can go watch this, and so that you can fast forward through the parts that really don't apply to you. All right. Wait, why did it do that? Okay, so what is credit? So the history behind credit is that credit is your reputation, right? Credit is how lenders see you for the first time or even see you at all. It's not like they're going to come to your house and get to know you before they loan you money, right? Your credit report is your reputation preceding you, right? So this is their way of, what all relationships has she had or he had with lenders, and would this be a good investment for me? At the end of the day, these banks, these companies, while it's cute that, you're buying your first home and it's the American dream, at the end of the day, these things are businesses. And so they need to be able to identify, is this a good investment for my business? At the end of the day, it all boils down to, do you pay your bills? Credit is the ability to borrow money or purchase goods and services under the guise that you'll pay them back at a later date. So you're pretty much entering into this agreement, whether it's a credit card or a loan, you're entering into this agreement like, hey, if you give me this money or you give me this credit card so that I can buy these things, I'm going to pay you back over time. That is the agreement that you're entering into. Your credit history is summarized in files known as credit reports, or often I refer to them as credit profiles. Again, this is the only way that these lenders and these companies are able to interact with you at all. The only way that they're able to see you. And so you want to make sure that the information that you're providing to these people shows the best picture about you, because anything on these reports could get them to say no. Now, these credit reports consist of information that are pulled from third-party reporting agencies such as like LexisNexis, Innovis, who else? Clue Auto. All of these third-company reporting agencies, they pull this information and they pull it together for Equifax, Experian, and TransUnion. Everybody knows the big three, right? So they pull this information together for them so that they are able to provide reports to the lenders with the information that they need specifically, so that they can give you guys loans or whatever it is you're applying for. Now, systems known as credit scoring models calculate your credit score based off of the information that's populating on your credit report. Now, while they are related, it's really important to understand that credit reports and credit scores have to be viewed as separate entities. And that's because there are things that you can add to your credit report that can, or do for your credit report, that can improve your credit profile, but sometimes it may not improve your score. So it's really important that you understand the correlation between the two, right? But that you don't think of them as just kind of one thing. You have to understand that they are separate. That is really important for you guys to understand. Now, the types of credit, right? So there's revolving credit, there's installment credit, and then there's open credit, or commonly referred to as like the charge card. So revolving credit is like credit cards, the lines of credit you get from a bank, things like that. These are items where like they'll give you a limit, you can spend up to the limit, and you'll make a payment every month until the item is paid off. And then you can keep using it until either you or the creditor cancel the account or close the account. Now, installment loans are a little bit different. Installment loans are, before you even, like when you go to sign the contract and you sit down, you should see like an amortization schedule where it shows you all of your scheduled payments, the amounts, the dates, all of that. And it's already kind of pre-drawn out so that you see everything. You can't borrow any more money outside of this loan, like for this loan, if that makes sense. It's not like a line of credit in that sense. And then once, the life of the loan is over, or you make all of the payments, the account will close. There's always a shelf life with a loan. And that's very important for you to understand, because adding new lines of credit to your profile is important because of the fact that installment loans have a shelf life, whereas revolving lines of credit, they stay open until somebody closes them, right? Either you or the creditor for whatever reason. Now, open credit or charge cards is a little bit different. A lot of people aren't familiar with this type of credit. Typically, you'll see this like for those of you who have like the gold card with Amex, or if you're in a business, the fleet cards that a lot of trucking companies and stuff have, those are considered charge cards, because you can spend whatever you want in a billing cycle, but at the end of that month, you're going to have to pay all of that money back. It's usually not just a portion. Now, there are exceptions in that case, but with charge cards, it's typically you can spend what you want, but you have to pay it all back at the end of the month. Now, it is important for you to have a good balance of credit. That's a really big part of your credit score. And so this is called a good mix of credit. And so you want to make sure that you have a little bit of everything on your credit. Now, they're not going to hold it against you if you don't have any charge cards specifically. However, you want to make sure you have good, a good mix of revolving lines of credit and installment loans when it comes to your credit, because that shows that you are a well-rounded individual, right? A bill payer. You don't only pay back one type of debt, you pay back all types of debt. It's really important, especially for those of you who are looking to buy homes and things like that. You really want to make sure that you have a good mix of credit, because it's not enough to just have credit cards. They want to see how good are you when it comes to loans, because this is a 15 to 30-year obligation, when you go to buy a home. So it's important for you to understand, kind of where you fall on that spectrum. And you can only do that by having these types of credit on your credit report. You need credit. You'd be surprised, well, maybe you're not, about how many comments I get on TikTok that tell me like, oh, I don't need credit. Like my grandpa built my house, or, I pay cash for cars, so I don't need a loan. Credit affects a lot more than just your ability to go into a bank and get a loan for a car or a loan for a home or a credit card. When it comes to job placement, there are multiple occupations where if you have poor credit, you will not be able to gain employment, like public service, certain positions in the military. If you've ever thought about getting into like cybersecurity, like if your credit is bad, they will snatch your security clearance. They will snatch your job because you are untrustworthy. We can't even trust you to pay your bills on time. How can we trust you to keep the secrets or to make sure you're not doing stuff you ain't got no business in exchange for money to handle your debts? You see where I'm going with that? So it's really important that you guys understand that credit affects more than just your ability to go get a loan. It also affects your car insurance. Oh my God. I cannot tell you how many times, people have been like, oh, I buy cash cars, so I don't need credit. You pay car insurance for that car, right? Your credit affects your car insurance. If you have poor credit, you will be paying higher car insurance because you're a liability. I heard Angela Yee talking about an app that helps with credit. Does that work? I don't know what app she was talking about, but there are a couple of really good fintech apps out there that can help you build your credit. One of them that I personally support is Altro, A-L-T-R-O. It used to be called Perch, and Jay-Z invested $2 million into it a couple years ago when he first found out about it. But what this app does, it allows people to use bills and things that they pay that normally would not report to your credit, that normally would not aid in giving you that history that's needed to build credit. So, and it's usually impoverished communities that suffer because they can't get the other items that'll help build their credit. It allows them to take subscriptions like Netflix and Hulu and things like that and have it reporting to their credit. And yeah, that can definitely help you build your credit. The biggest things when looking at those apps is, one, you want them to report to as many credit bureaus as possible. It is not required for somebody to report to all 3 credit bureaus, but that's typically what you should want to look for when something is reporting to the bureaus, so that you can make sure it's boosting all of your scores. And you also want to make sure that it makes sense. You should not be spending more money, to build your credit if it's not in your budget, right? You should really want something that supports your current spending habits. That should kind of be one of your top priorities as well. Your credit score can also affect where you live. A lot of people don't understand until they go to apply for an apartment or something like that, and then it just doesn't work out, that your credit score plays a huge role in where you live. Because, a lot of the better communities, right, they have like, you got to make 4 times the rent plus have like a 750 credit score. Whereas the not so good parts in town only rent to people that, they can mainly rent to people who have lower credit scores, lower income. And it's like that for a reason, right? In order for the economy to survive, there needs to be poverty and blah, 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 blah. But this is also, in essence, right, this is a way to ensure that poverty continues, right? By making these dumb requirements, and it's not regulated either. Let's talk about that. But by making these requirements and basing it off of your credit score, knowing that most impoverished or low-income communities don't have access to the proper tools to build their credit at younger ages or even provide financial literacy in the schools, by doing this, they are ensuring that it kind of continues the cycle of poverty in a sense. Your credit score affects whether you got to put a deposit down for utilities or not. For those of you who have moved into your own place, you can attest, right? If you don't have credit or you got bad credit, girl, you putting down a deposit for that gas and electric. And a lot of times it's not cheap. And also business credit. For those of you who are looking to be entrepreneurs and you are starting that journey, It is very attractive sometimes for people to use their personal credit to build their business credit, right? Because it's quick and it's easy. But if you don't have good credit, then a lot of times it prohibits you from doing so because they're not going to give you credit based off of your personal credit. Why would they do that? You have terrible credit. So, as I've stated, credit affects so much more than just buying a house or buying a car. And it's really, 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 really important that you guys understand that and stress the importance of it so that you are having these credit conversations and that you're looking to understand these concepts to improve your quality of life. So, you guys, let me see if I can turn this around so that you guys can see on Instagram. But the image that I have up there is pretty much showing you how credit scores are calculated. I always tell people if your score is stagnant, like if it's just not moving, if you're like, damn, I'm trying to apply for this and I'm only a couple points short. If you're not understanding why you got denied for something, you always start with, let me break down my credit score to see what is affecting my credit worthiness, right? And so 35% of your credit score is going to be your on-time payment history, right? That's real. Like when we say pay your bills, we're not just saying it to say it. We're saying it because the more bills you pay on time, the better your history. If you get a late payment, that has the potential to tank your score. Now, the older a late payment is, the less of an effect it has on your score, but it still has an effect on your score for the duration of the reporting of this account. Now, when you guys have credit cards and stuff, it's going to report for the life of that account that you had a late payment at some point. Now, most lenders don't care outside of 2 years, but they can still see that there was a point in time when you were late. So it's really important to make sure that you're always on time. And if you have any late payments, try to negotiate the removals with the lender before it becomes an issue. Oh, hold on. Somebody had a question on YouTube. Do you dispute traffic violations and claims history the same way as public records with LexisNexis? Yes, it's all about, okay, let me rephrase that. It depends. With claim history, yes, because that's something that you can dispute with Clue Auto or one of the other third-party reporting agencies that provide the information to the main bureaus. Because it's a credit reporting agency, or SCRA as they're referred to, they follow the same rules and guidelines like the FCRA and things like that. Now, when it comes to traffic violations, it really depends on what part of the process you're in. So like, let's say you got a traffic violation, you didn't go to court and they issued a judgment against you. Removing that judgment is going to be difficult because the judgment was ordered by a judge. So the only way you'd be able to officially remove it is to get a judge to vacate that judgment, if that makes sense. And so that does require a lawyer in most cases. Now, if you're just trying to remove the history of traffic violations on your credit report, you need to figure out where are they getting the information about the traffic violation from and try to block that communication. It could be another third-party reporting agency or anything like that. But the thing about traffic violations is they're public record. I could literally pull up my traffic violations on Maryland Case Search. So, every state has a public record of things like traffic violations, civil court, things like that. And so since those items are public record, the only way you can really get those off is by, you're going to have to restrict someone's access to that information to make it impossible for them to validate or verify. And then by doing that, it'll allow you to when you go to dispute it, they can't verify it, so they have to stop reporting it. Utility charge / CLD account reporting and now sent to collections. I thought closed accounts didn't need to be paid. That's not true. Closed accounts still need to be paid because they're still going to report. Whenever an account closes, whether you have a balance or not, it's going to report for the next 7 years. If the account is unpaid, it's going to report for 7 years from the date of first delinquency or that first missed payment that led to the charge off. If it's a paid account, then it's going to report for 7 years past the date of last payment. I'm just making sure I answered everybody's questions before I move on to the next slide. All right. So how many points is each section worth? Oh, I'm sorry, I didn't even finish breaking down the sections. That's my fault. My bad. The use of available credit or credit utilization. Now, this section I probably spend the most of my time talking about because credit utilization is the easiest section to manipulate for points. This is how much of your overall available credit are you actually using, right? Now, this is where credit cards, right? How many credit cards do you have? And whenever anybody has one credit card, I always be like, you need more than one. You need to kind of share that responsibility of your credit utilization because, and this is why, if you have a credit card that's worth $300 and you max maxed that card out, you have now maxed out your credit utilization, and that's going to kill your score. That's 30% of your score, right? It's going to trash your score. However, if you have one card for $300, one card for $500, another card for $500. Yeah, you max this card out at $300, but you still have $1,000 available to you in credit. And so that's going to make sure that it doesn't necessarily kill your credit, but your utilization is going to go up a little bit. Now, when it comes to credit utilization, the biggest thing, the way to best manage it, let me say it like that, is, for those of you that follow me for a while, the thing that I preach, right, my framework is CREAM. Credit rules everything around me. And I really try to get people to understand how credit affects everything around you so that you can incorporate it into your daily activity. Now, in saying that, I preach that you should not be using your debit card. Any purchases that you make out in public, online, whatever the case may be, needs to be done with a credit card. Unless unless otherwise they're like, no, we don't take credit cards. You get what I'm saying? So, and the reason why is, one, you need to be using your credit cards. Your credit cards are only valuable to you if you're actually using them. Now, I know on my videos, I get those people who are like, I have an 850 credit score and I never use my credit card. Good for fucking you. My content is not for you. My content is for people who are rebuilding or building, initially and want to start off strong. You're going to have to use these cards. You remember, these banks, these lenders, these are businesses. So you have to show a business that it makes sense to invest in you, to give you higher credit limits. You know what I'm saying? Oh, thank you for the roses. To give you like larger amount loans, things like that. You have to show them that it's worth their time. A way that you show them that it's worth their time is by using the actual cards. Now, I've had this conversation multiple times, especially over the last year, where I tell people that you got to think about it as if you got two friends, right? One went to college and got a degree and one did not. Now, the friend that did not go to college and get a degree, his life isn't over, right? You can still have a degree, because when you don't have something, if you're lacking in one area, you can try to network. If he networks with the right people, that second person can still come up in the world, right? And you got to think about your relationship with your lender when you think about, you got to think about it like that. I don't have a degree. I don't have good credit. So what can I do to make sure that I'm setting myself up financially so that, I can utilize what I have to get what I want? And this is going to be, you need to start building on the relationship that you have with your lender by using your actual credit cards. Now, a strategy that I teach clients and anybody who follows me really is that when you use your credit card, pay it off. When you use your credit card, you can pay it all the way off immediately if you want to. I typically will, like, if I spend $50, I'll pay $45. There's a reason to that madness, but you typically, this is going to ensure that you're only spending money that you actually have. I know credit card debt is the biggest problem in America, right? Because people are just spending. But by using this particular method, right? If I go to 7-Eleven and I have $50 in my account that I have designated for gas, and I pump that $50 worth of gas, there is no benefit in using my debit card. Now, there are some debit cards that started offering perks, and that's cute, but the good credit cards still outweigh whatever that debit card is supposed to give you. Stop using it. There's no inherent benefit with using your debit card. However, I'm going to use my credit card that I know for a fact it gives me cash back for all purchases at the pump, right? I know I get 3% cash back for gas, or I know I get points for gas. I know I get something for the purchase that I was already planning on making. After I pump my gas and I get back in my car, I schedule an immediate payment for all of the money that I just spent. This ensures that I'm not spending more than I actually have to cover. My credit utilization is staying as low as possible, and I'm not allowing my credit card debt to become unmanageable, right? It's making sure that I am staying within a certain, percentage of my utilization, which ensures that my credit card debt is as low as I can possibly get it. Now, I don't suggest this method if you are somebody who struggles with, paying bills, right? If you have high balances already, you're going to want to pay those balances down first, right? And then you could start doing something like this. But the credit cards that you add to your account, the credit cards that you're using should support the spending you're already doing. The credit cards you're getting should not encourage you to spend more money. It should just reward you for the spending that you're already doing. That's going to make sure that you use it. Should the credit card be used to even pay bills? If you can, go for it, as long as you still have that cash, right? Whatever you spend your money on is whatever you spend your money on, right? You were going to spend that money anyway. Everybody got to pay their bills, right? Everybody has to pay their bills. So, if you can use a credit card to do it, use a credit card to do it, and just take that money that you already had allotted to that bill and just pay that card off. Don't let those balances sit for too long. I paid off a bill, received a paid in full letter, but it is still showing as past due for 2 months. Well, if you have the paid in full letter and proof of, like, you got your proof of payment, what you can do is you can take that information and write a letter to the credit bureaus and say, hey, this account is reporting inaccurately. Here is the proof of payment as well as the paid in full acknowledgement letter from the lender saying that this account was paid in full. However, it's still reporting as unpaid, and they'll make sure that it gets updated for you. So just because you dispute it once does not mean you're going to get anywhere. The dispute process is a lot more than just disputing it online, right? Or telling Experian this is not right. If you went to Experian and you told them it's not right, and an Experian came back to you and said, no, this information is updated, or this information is verified, right? This information is reporting accurately. Your next set of options is that you go directly to the lender. So you go to your lender and you say, hey, this is my paid in full letter. This is my proof of payment. Why have you not updated this account with the bureaus? Oh, thank you so much. That's what you're going to do to ensure that you get the account updated. And if they don't do it after that, that's just willful noncompliance, and you can use this to file a complaint against them. Why, if the credit card doesn't have any perks, being it is an unsecured card with low credit amount? When you have bad credit, they're not offering you no whole bunch of perks because honestly, they don't even know if you're going to pay these fucking bills. It's kind of like a penalization, right? For not having cash, for not having a credit score. So, you're going to use these cards to get you closer to the other cards. These subprime lenders are not forever cards, right? The Indigo, the Open Sky, the First Premier. These cards are not forever cards. These are cards that you use, right? You make sure you use them. You make sure that it's consistently low reporting utilization, and you allow them to provide that history to your credit report, and you use them as stepping stones to get to better cards with better perks and lower annual fees and lower interest rates. And then eventually you'll get to the tiered credit cards that offer you perks, but you have to work your way up to that. Now, the next section is going to be the length of credit history. A lot of people don't talk about this part because they don't like hearing it, but it takes time to build credit. How long you've been building credit is an important part of your credit score. And the reason why is because the thing about your credit report is that it's supposed to represent a pattern, right? If you have bad credit, then technically that means you have a pattern of poor credit making skills, right? Decisions, I apologize. Poor credit making decisions, right? And so if you have good credit, that means that you've made a bunch of positive decisions. It means that you've made a bunch of good decisions that, let's say you've got like 5 years of one-time payment history or something like that. A decision can't be made off of one payment. If you have one account with one reported payment, that's not enough history to really figure out where you fall on the bill paying spectrum. It takes time. Credit cards aren't even considered mature until they're about 4 or 5 years old. So it's important that you guys add these accounts to your profile with the intent on letting them sit on there for a while in order to soak up all of the points that it can provide you. So please, I know y'all be like, well, I added a credit card 2 months ago and it brought my score down. What was you expecting it to do? Whenever you add a new account to your credit profile or close an account on your credit profile to include paying off a loan, right? Your score is going to drop. And the reason why is because now your score has to adjust to this account no longer reporting monthly as an open account. And in that adjusting, your score is going to fluctuate a little bit. Now, it is temporary. You'll be able to recover some of those points as long as you're doing everything else you're supposed to. But the truth of the matter is your score is going to go down. That's just what it is. And you're not giving it enough time to rebound in 3 months. When there's any action that needs to be like reported or, to the credit bureaus or whatever from the lender, they usually say give them about 45 business days anyway, 30 to 45 business days. That's about 2 calendar months, right? On a calendar, yeah, it's about 63 calendar days, right? So 2 months. So if you're only giving it 3 months and then wondering why your score didn't shoot up like all those people in the credit repair group, that's because you didn't understand how this works. That's why. How do I update my personal information to the credit bureaus? By providing them with the information you want reporting, and then you need to figure out why that old information is still reporting. If you ask the credit bureaus to remove information and they do not, that means that there is an account somewhere that is reporting that old information. This is why it is very important whenever you move, whenever you relocate, you need to be updating everybody that you pay bills to. It's not enough just for you to put in a mail notification that you're changing your address. You need to physically contact each and every lender that you have to update your contact information. That is going to help you when it comes time to cleaning up your personal information section. Now, if it's tied to an old closed derogatory account, then that's a whole nother topic. And if you don't know what account it's tied to, I did a really good video on an enhanced personal information update. You're going to have to scroll a little bit because it's probably like a month or so old, but it explained how Experian has a kind of backdoor using their dispute process. You're not going to submit the dispute, but it allows you to identify the relationship between the piece of personal information that you're looking to remove and the account that it's tied to. I hope that helped. The next section is going to be your mix of accounts, right? And we talked about this a little bit earlier. Hey, Marcus. We talked about this a little bit earlier, and how you need a good balanced account, right? You don't want them to think, oh, you only pay credit cards or she only pay loans. You want them to know, like, I pay my bills are paid, right? You have to be a well-rounded bill payer. This is going to help you get more accounts. And inquiries. Now, I'm starting to see more and more where the inquiry section is being referred to as new accounts because they're trying to change kind of the stigma surrounding this because everybody is so focused on removing inquiries and not really understanding why it plays a huge role. When it comes to your credit, a good rule of thumb, like what I tell my clients, is you should not be opening any more than 5 accounts in a 12-month time period. And the reason why is if you add too many accounts at one time, it's a red flag to lenders. Why are you asking for all of this credit all of a sudden? Is something going on with your finances and you can't afford certain things? Like, are you a scammer? Like, what is this? And so you really want to restrict yourself to how many accounts you're opening up in a 12-month time period. And it's where inquiries come in. Because when it comes to inquiries, you should have no more than 5 in a 12-month time period. Now, obviously, if you go car shopping without a pre-approval, you're going to get more than 5 inquiries. And that's common. It's not uncommon, right? It sucks. Now, you can remove those inquiries, and we can talk about that in a different video or after the presentation. However, it's just important to know that you really got to be cognizant of how many inquiries you are adding to your profile. Now, remember how I talked a little bit about earlier how the credit score and the credit profile is 2 different things. When it comes to inquiries, this is one of the first places that you'll be able to identify it. Now, you hear people talk all the time, when you are shopping for a car, girl, shop around within that 30 days because it's only going to hit your credit score one time. What these people don't understand is that, yes, it will only affect your credit score one time, but the inquiry is still recorded on your credit report. If you pull up your credit report, you will still see each and every person that they sent your credit application to see if they'll give you a vehicle. Unfortunately, right, even though it doesn't affect your score, you could have an 800 credit score. I literally had a guy pay me $100 to sit there and look at his credit report and tell him why with an 800 credit score was he denied for a Discover card. And the reason why was because he had opened up too many accounts in a 12-month time period. That was why. It doesn't matter what your score is. There are certain things on your credit report that can automatically disqualify you with certain lenders. For example, I don't know if you guys know this, but Chase has something known as the 524 rule, right? If you open more than 5 credit cards in a 24-month time period, they're going to fucking deny you if you put it in that application. That's just kind of how that goes. A lot of people don't know that until they're denied, right? So it's really important that you guys, do your research when you're adding new accounts to your profile, obviously, to see what their personal guidelines are when adding these accounts. But it's also important for you guys to understand how these accounts apply to your credit score and your credit profile. And this is why I'm so big on kind of like shoving this information down you guys' throat, because it's not enough to just know, oh, I pay my credit card and my credit is okay. You have to understand why the payment you made to your credit card improved your credit score and how. Like, you have to understand these concepts, especially if you have children. You should really be able to understand these concepts and apply it to your children's lives so that when they are 18, 19, 20, and making decisions on their own, they're making the best decisions. Now, this is kind of like a points representation. This is only like a guesstimate. Obviously, FICO holds their cards close to their chest, right? But this is just a guesstimate on how many points each section is worth. So you can get up to this amount of points in each section. And if you look on-time payment history and use of available credits, that's a lot of point, or credit utilization. That's a lot of points. For those of you on Instagram, on-time payments is about 192.5 points, and use of available credit or credit utilization is 165 points approximately. So in saying that, it's really important to understand, like, y'all are leaving a lot of points on the table when it comes to these sections. So if you have a stagnant credit score, if you just like, damn, I just need a couple points before I go apply for this thing, like, where can I squeeze some more points out of? Look at this chart and then look at your credit profile so that you can kind of break everything down. I was binge watching your videos and I saw that you were thinking about doing videos that break down the credit laws to help people understand better. Do you still plan on doing that? Yes. The only reason I have not done that is because of the format in which it has to be done. For example, this is a SCRA breakdown. The SCRA is a consumer protection law. So this technically counts as that. But look, I had to go live. I couldn't really post a video. These laws are very complex. And I have to break them down in a way that you all can easily digest it. And so in doing that, it usually has to be done during lives or workshops. For example, my very first workshop. So this summer, I'm doing a series called The Class About Nothing. And in this series, there's going to be a breakdown of all the consumer protection laws, how to dispute, how to build credit. There's going to be just like a series of courses throughout the summer. The first one is going to be on June 2nd. We're doing a class on third-party reporting agencies, how that applies to like bankruptcies, evictions, and things like that, and the laws that kind of apply to them. And then on the 3rd, it's going to be that class, the credit utilization. Sorry, I'm getting ahead of myself. The third-party reporting agency course is called Snitches Get Stitches, right? Because, yes, I'm on YouTube, Jessica. It's called Snitches Get Stitches because you all know the third-party reporting agencies are the ones who tell on you to the credit bureau. So that course is called the Snitches Get Stitches. The next class for June 3rd is Congratulations, Now What? This is for my high school and my college graduates. And there we talk about the importance of building credit, how to properly build credit, breaking down the simple stuff, like what is a credit report, how to read your credit report and things like that. So it's a lot of information that's going to be available to them as well. And then each workshop that I do after that is going to kind of be in support of the overall goal of educating you guys on all things credit. So it's going to be consumer law. It's going to be, we're going to do lives with the mortgage mentor and talking about home buying. I'm trying to get a live with a actual consumer lawyer so he can answer like your law questions and things like that. So it's coming. It's just that I can't post it in little video bites. It just makes more sense to do them live or to do workshops where you guys can go back and rewind and take notes and things like that. All right, so next slide. How many credit scores are there? This is probably like the number 2 question that I get. Like, which app should I be looking at? Because all these apps got different credit scores and I don't know and da-da-da-da. To be honest, all of the credit scores are right. Whenever you look up an app, all of those credit scores are right. They're all of them. But the reason why when you apply for something, you see one score and probably what you're looking at on like a Credit Karma is a different score is because those are 2 different credit scoring models. So the 2 prevalent scoring models, right, are FICO and Vantage. Now, Vantage score is what you typically see with Credit Karma, Smart Credit, Credit Sesame, and other places. It's not that this is an outdated or scoring system. It's just that most lenders are not using Vantage score. That's not to say that there are not some lenders who are actively using it, but a lot of lenders do not. And so, yes, it's good to know where your Vantage score falls because you never know when you're going to apply for something and they use your Vantage score. However, a lot of people don't prioritize their Vantage score. Now, FICO being the industry standard, that's probably the one you really need to familiarize yourself with, and it's usually the one that you got to pay for. Now, some banks offer your FICO base 8 score, like your FICO 8 base score. I said it backwards. Your FICO 8 base score, which is the most popular score that is used. However, that's not the only score that FICO has. FICO base scores, which is like your FICO 8, your FICO 10, your FICO 10T, your FICO 2, your FICO 4, let me take that back. Just your FICO 8, your FICO 10, and your FICO 10T. And your FICO 9, those are the ones that you'll typically see now. These base scores help predict pretty much your ability to repay all kinds of debt, right? Any kind of debt. And it goes from 300 to 850. But FICO also produces something known as industry-specific scores. This is your FICO auto score, your FICO credit card score, the 3 FICO mortgage scores. These like predict your ability to pay back that specific type of debt. So if it's your auto score, obviously it's your ability to pay back an auto loan. If it's your credit card score, it's your ability to pay back a credit card, and etc. Now, these industry-specific scores go from 250 to 900. And these are the ones that you really need to concern yourself with if you have an active goal in mind. Now, if you're just tracking your credit to track your credit, then looking at your Vantage and just a FICO base score is good enough for you. But if you're looking like, oh, I want to buy a house in like a year or two, you need to be tracking your FICO 2, your FICO 4, and your FICO 5. These are known as your FICO mortgage scores. If you're looking to buy a car, you need to be looking at your FICO auto score. If you're looking to add specific credit cards, you need to be looking at your FICO credit card score. But you can always do research on any accounts that you're interested in, and you should always be able to find out what score does this particular lender prioritize when trying to determine my credit worthiness. Do we sign up through the Facebook group? For the workshops, if any of you are ever interested in any of the workshops, the link is available first in the Facebook group, but it is always available on my website at themoneyplug.co /events. If you go to events, you'll be able to sign up for the workshops through there. All right, let's see. Credit reports. So we went over credit scores and all the different credit scores, right? Let's talk about the reports. Remember, these are two separate entities, guys, two separate entities. So you have to understand that there are things that you can add to your credit profile that will boost your score. There's things that you can, do for your credit profile that'll boost your score. And there are things that you can do for your credit profile that won't do anything for your score, but it will improve your credit worthiness as far as your report. Now, information in your report includes all the payment history associated with accounts, details such as how much you borrowed or what your your limit is. Hey, girl. It shows things like whether or not you've been late before, things like mortgage foreclosures, bankruptcies, judgments, if you're in the rears for child support, got your car repossessed. Your credit profile will tell a lot of your business. So one, it's very important that you guys are pulling these reports at the very least once a year to kind of see where you fall. And then you also want to make sure that nobody else is looking at this. They don't need to be looking at it, right? So it's very important that you understand that. Now, I'm going to break down, thank you for the rose. I'm going to break down a credit report, right? So that you guys can understand the different sections and how it applies to everything. So a little while ago, we talked about updating your personal information, right? And why it is important that you update your personal. Yes, this is getting recorded. It's going to be on Facebook and YouTube and Twitter, actually. So, sorry. So a little while ago, we talked about updating your personal information with the credit bureaus and why that's important, right? Because when you update your personal information with the credit bureaus, this kind of helps it so that you don't get a merged credit file. I see this a lot with like juniors and seniors, or the second and third and the fourth. If you guys had a family home and y'all got like the same initials and stuff, you see it a lot. The information that's provided whenever you fill out an application, that information is saved to your credit report, and it keeps reporting. And so if somebody else who has similar information to you applies for something, there is a chance that it could be added to your credit profile. And then it also works in the sense that, like, if you're trying to dispute something, it's really important that you clear your personal information first, because that's the first place they look to try to verify or validate a debt. Does the information we have match the information that's already reported to the credit report? And if you clean up your personal information, that'll kind of help you in that regard. Now, the sections of a credit report with the identification information section, and I'm going to turn this camera around so that you guys can see the actual chart that's on the slide. Sorry, Instagram. I wish they would let me do desktop sharing, but this is the information and the priority that the credit bureaus put it in. So there's your TransUnion prioritizes last name, first name, social address. Equifax, last name, first initial address, so security number. So clearly with Equifax, you can see that if you are a junior or if you are a senior or second, third, fourth, this could pose a potential problem with you. Experian, they look at your zip code, your address, your last name, your first name, your social. So it's really important that you guys clean all of that information up, as often as possible. I typically tell people, especially my military, because that's who this presentation is initially designed for. I typically tell you guys, every time you PCS, you need to be sending off a letter to the credit bureaus to update your personal information every time you PCS. Like, it should literally be a part of your in processing. When you in process and you change your address at your unit, whether you're living in a barracks or whatever the case may be, you need to be updating your address with the credit bureau specifically. You also need to be going around to every single lender that you have for your car, for your credit cards, for your loans, your student loans, your car loan, your mortgage, whatever it is. You need to make sure that you are reaching out to these companies after every PCS or move, for those of you who are not military, and updating them. And the reason why is if you don't update them, right, and then this account closes and they have this address on file, and let's say you got good information tied to this as well. When you move again and, you go back and you're like, damn, this account negative and I want to get it taken off. Let me clean up my personal information. You're not going to be able to, because that address that you have that's on your credit report is now tied to this account. And you're not going to be able to remove it because they always report information that reports to them. So if this account is derogatory and reporting to the bureaus and they're reporting this address, it's going to be harder for you to remove the address. That's just kind of like how the cookie crumbles. So make sure you are updating all of your lenders every time you PCS. Now, for those of you who live in the barracks, I typically tell people that when it comes to things like that, you need to have a home of record. For those of you who are blessed enough to still have family and still have a support system, maybe like a mom or a dad or an aunt or grandma or something like that, but you should have like one stationary address that you should be able to use for information and stuff like this, so you're not constantly having to update everything. Now, if you don't have that, obviously it's nothing you can really do about that. But, you know, if you do have that option, that is something really, like, that is a really good nugget that you guys should try to work out between you and them. Achoo! Achoo! Shit. Okay. Now, this is an example of what the personal information section will look like on Identity IQ, which is a credit monitoring service that I typically recommend to people who are like, damn, where can I pull my credit report or keep an eye on my credit and things like that. I typically recommend Smart Credit, Identity IQ, my FICO. Those are like my top three. Ooh, thank you, girl. And I'll show you guys, but a lot of it is blocked out, obviously, because, you know, protection. But this is what the section looks like. Now, the reason why I love these credit monitoring services is because look at this. TransUnion, Experian, and Equifax, side by side by side. So if I'm cleaning up my credit, it makes it so easier for me because I can literally just go across, and anything that doesn't match, I know this is an inaccuracy and I know I can dispute it. And I love that. Whereas like when I look at like Experian reports, or pull my reports from Experian, and I hate doing it, I literally got to go through each credit profile individually, and it's irritating. So work smarter, not harder. This is why I love these credit monitoring services. Now, if you look at the sections, you'll see credit report date. What date was the information for this report generated, right? Name. You want to make sure your name is the same across all three bureaus. That is very, very important, especially for those of you who are juniors, seniors, first, second, third, whatever the case may be. Also known as, if you've ever been known legally under another name, or if you have an alias that you've gone by, I've seen it a couple times. Victoria will be Vicky, or something like that. You'll see that here. If for women, a lot of times if you've been married previously, you'll see it in either former or AKA. You'll see like your old maiden names, or if you're divorced now, you'll see your old married name, things like that. Obviously, date of birth kind of speaks for itself. Current addresses. This is where you are now. Previous addresses. You only need one previous address technically, but you can have more than one. It's really just up to you, and if it's hurting you in any way. And then you'll see like on certain reports, you'll see things like employer, phone number, things like that. All of this information plays a part when a debt collector or a original creditor go to verify or validate information about you. So this is why it is very, very important for you to keep this section as clean as possible. Now, the other sections of your credit report, or the next section, usually it's the account history section. Now, this section has the most information about you, right? This is where you're going to see all of the original creditors that you owe, the payment history associated with those accounts. What if it's been 20 years at the same address? If it's been 20 years at the same address, then you won't have to really update it at all, honestly. You can just leave it where it is. It'll show you amounts related to accounts. It'll show whether or not you've ever, like if you've refinanced a loan before, you'll see the old loan, when that loan was paid off, and then when the new loan started. Like it shows you any information you need to know. This is the meat and potatoes of your credit report. You'll also see things like charged off accounts. These are accounts that were with an original creditor like Capital One, Bank of America, Wells Fargo, and you did not pay them, and they closed the account and they charged it off as a loss. This does not mean that you no longer owe them money. This is simply for tax purposes. They have charged off the account. When an account is charged off, that company now has two options. They can either continue to pursue you for this debt, or they could choose not to pursue you anymore and they could sell it to a debt collection company. And if that's the case, now you will see this account as a charge off because it has to report the history associated with this account. And then you'll see a collection account where they're just trying to get their coins at this point. This is an example of an account in the account history section. How clear? Oh, it's kind of small on you guys' screen. And for those of you who are looking on your phone, I do apologize. As always, you guys can kind of like go back and rewatch this, but the sections are kind of self-explanatory. So up at the top, you'll see account number. Account number obviously needs to be the same all the way across the board. A lot of times you'll see a lot of stars or asterisks or whatever you want to call them, kind of blocking out the important information. But the numbers you can see need to match. What happens if they haven't sold it? If they haven't sold it, it'll just stay a charge off and it'll just have an unpaid balance or past due balance. And that's going to show you how much you owe these people. Now, the way you can tell is if it was sold to collections, even if the collection company isn't reporting yet. If you look at a charge off, and in this section, where is it? Right here in the past due section. And I know you guys can't see it on TikTok, but if you scroll down a little bit, right here where it says past due, you'll notice for this counter it says 0. This person obviously isn't past due. Look at all the green. But if the past due amount is 0 and you did not render payment and you never received a forgiveness notice, then what that means usually is that it was sold to a collection company. The collection company paid some kind of money to get the rights to collect on this debt. And you should be getting contacted by a debt collection company to pay that debt. These sections are really self-explanatory, but there are some that I really want to touch on. So for example, account type. Now, I just know as a credit specialist, plus I'm the one who put together the slideshow, right? Up here it says SYNCB/JCP, right? This is, let me see if I can do this with my thing. Okay, so up here, right, it says SYNCB/JCP. I know for a fact that Synchrony Bank is a bank that provides credit cards for stores. So like, for example, this is JCPenney. Synchrony does like the Sleep Number store and things like that. You open up accounts with them with Synchrony Bank, but it's through that particular store. So I know for a fact this is a store card. Number one, it's a revolving line of credit. So this means it's a credit card. Number two, it's a charge card. Usually I see this with store cards. And then, again, I would verify it by looking at who owns the account. Now, right here, you'll see bureau code, individual. This is very important. Now, I talk to parents a lot of times about when you're helping your child build credit, or if you have a spouse or somebody that you're helping build credit, you can put them on as an authorized user for your account. However, you can add accounts to your profile, as an authorized user, and that's fine, right? But you cannot build a solid credit profile on strictly authorized user accounts. You need to have accounts where you are the individual or joint person responsible. An authorized user does not have the same financial responsibility tied to a debt that somebody who's the only owner or like the individual or a joint account, where if something happens to you, they don't have to pay that debt. Whereas if it was a joint account, then that other party is just as responsible for paying this debt, just like you. So this is for if you ever co-sign for somebody or things like that. When you co-sign for somebody, you are saying, if they can't pay the bill, I'll pay it. Obviously, nobody goes into a loan or anything like that saying they're not going to pay their bills, but it happens. So if you don't plan on paying other people's bills, I would not suggest you co-signing for them. Some other important things that you need to know is the date of last activity and the date of last payment. This is very important because these two dates determine two very important parts when it comes to debt and like when you're cleaning your credit up. So the date of last payment, when it's a paid off account, right, that determines how long this account will report to the credit bureaus. Now, when it comes to date of last activity, this determines how long a company has to sue you or the statute of limitations. Now, the statute of limitations vary state by state. For example, I know Ohio changed theirs from like 15, so I think it's down to 6 now. New York just changed theirs from 6 to 3. So, that fluctuates over the years. So make sure you're getting the most up-to-date information. However, the date of last activity can also be reset. The date of last activity can be reset whenever the company specifies that accounts were made on your profile. Now, when I did a video the other day giving everybody the script that you can give to a debt collector to get them to stop calling you, a lot of people were like, well, the statute of limitations is only reset with a payment. That's not entirely true. The statute of limitations can be reset with an admission. And a lot of times by verifying the information associated with a debt collector can finesse a consumer into admission. By verifying all of the information associated with the debt, right? Your name, where you live, did you ever have this account before? Is this account reporting inaccurately? How do you plan on paying? I don't plan on paying shit. Or a lot of people be like, I don't got the money now, call me later. That's also an admission. So the reason why I posted the script was to prevent you guys from doing that. Not so that the debt goes away. The debt does not go away when you say that speech for them to not call you anymore. It's to restrict how they can contact you. By taking away their option to call you, that means they either have to email you, text you, or write you a letter. All three of these provide written evidence that can be produced in court. Even though these companies say they record all these conversations, you also have to understand that they record the recorded conversations. So if they are responsible for them and they handle them, they could be corrupted. They could be lost. So it's important for you guys to protect yourselves in handling these debts. And so by restricting them to only written communication, you are benefiting yourself when it's come time for you to handle this debt, not necessarily hindering yourself like a lot of people will try to force you to believe. No, the script isn't available on my website because it's not like something you buy. It is in my if I'm not mistaken, it's not a reel because it was too long. If it's not a reel, and I've started putting covers on all my reels and recorded lives, so you can go back and scroll, but pretty much it's on TikTok if you are active on TikTok. And I think it's also in the Facebook group, if I'm not mistaken, but it's not on the website. And the script literally just goes like, if a debt collector calls you and they say, hey, Markia, and you like, I'm sorry, who is this? And I'll say, oh, we're trying to find Markia. Is this Markia? What you will then say is, if this is an attempt to collect the debt, all attempts to collect the debt need to be done in writing using the address that you have on file. Please do not contact this number anymore. It's literally as simple as that. You're not telling them not to contact you anymore. You're saying just don't call my phone. So you're restricting how they communicate with you, not necessarily saying that they cannot communicate with you. Does that make sense? So I definitely wanted to clear that up because I see a lot of those comments on the video itself, which shout out to y'all because it has over 700,000 views. So thank you for that. Now, the next section of a credit report is the section that talks about your hard inquiries. There's two types of inquiries that you'll see on your credit report: hard inquiries and soft inquiries. A hard inquiry is an inquiry where you filled out an application or gave some kind of consent for a company to pull your credit, your entire credit report. And it's usually because you want them to make some kind of decision. So like if you're applying for an apartment, a credit card, a loan, etc., right? And there's certain information that has to be reported. First of all, the company that is accessing your credit report, when they accessed your credit report, and what credit report they accessed. The type of business you don't always see, and I guess that's fine. But as long as the creditor name, the date of the inquiry, and the credit bureau that they pulled your report from shows, it's good to go. Now, when it comes to cleaning up your inquiries, if it is tied to an account that was never opened, so let's say you went car shopping, they ran your credit 10 times. Obviously, you only get one loan, so that leaves you 9 inquiries that are kind of useless. You can clean inquiries up from a credit profile by using the law of permissible purpose. The law of permissible purpose states that a company needs to provide some sort of evidence in the form of like a written authorization or a copy of a credit application where you gave them permission to pull your credit report. And if they cannot produce that information, then they have to remove the inquiry from your credit report. So if you're trying to remove inquiries from your credit report, then what you would then do is you would send the credit bureaus first, and sometimes they'll tell you they can't do nothing and send the letter to the creditors. Either way, it's the same letter. And you'll say, hey, I put a copy of my credit report and I'm noticing this inquiry that you all are reporting, and I just do not have a recollection of giving this authorization. Could you please provide me a copy of the application or authorization that you received from me where I said it was okay for you to pull a copy of my credit? Literally that simple. And if they can't, it comes off. If they can, you stuck with it, but I mean, you already lost the points for it, so it really doesn't make a difference. And inquiries aren't really worth a whole bunch of points anyway, so don't kill yourself over it. But that is... hard inquiries do affect your credit score, and it also affects your credit worthiness. Remember, we talked about that. Now, when it comes to soft inquiries, right? Soft inquiries are a lot different. Soft inquiries don't have no bearing. They have no bearing on your credit score whatsoever, or even your credit report. The only person who can actually see the soft inquiry section of your credit profile is you. The only person who can see that is you. Now, a lot of times, so like for example, if you have Capital One, you'll see credit-wise in the soft inquiries. This is like, Capital One offers that service where you can look at your credit report. It'll give you a free credit score every month, right? And it'll consistently update it based off of whatever's going on in your life financially. So you'll see that on there. If you have like a Victoria's Secret card or anything with like Community Bank, you'll see them on there a lot. And a lot of lenders keep an eye on your credit even after you got an account. And the reason why is because if your credit goes too far to the left, then they're going to close your account out. And they're going to be like, hey, you're too much of a liability. They're either going to lower your credit limit or completely close your account and then ask you to pay the money back that you still owe. And then they're like, no, we're done doing business with you because we got to cut our losses. Now, if your credit score goes up, this is how they're able to offer you credit limit increases, because they're monitoring your credit score. So if your credit score improves significantly from when you actually got the account, then that qualifies you for a credit limit increase. So it's very important that even after you get the account, y'all, make sure y'all sticking on top of y'all stuff, because they will, without a doubt, close your account in a heartbeat if your credit score goes in the wrong direction for too long. Especially Community Bank. Ugh. Now, the last section of a credit report, well, not the last section, but the last one that you really need to know is the public information section. This is where you'll typically see any court judgments. So if you're in the arrears for child support, or if you're being sued for something and you got a judgment against you, this is where that information could populate. Now, there were a couple changes recently to the information that's available publicly and how it reports to the credit bureaus. So it's very rare that I even see a lot of different judgments up here. Usually it's only the really serious ones like a foreclosure or a bankruptcy and things like that. But, you know, you never know. There's a very specific criteria that needs to be met for public information, things like judgments and stuff like that to report. I need a template for all this information you're given, especially overall credit repair. Listen, it's a lot of information. I'm gonna be 1,000% honest with you. Everybody's like, well, can you just give me like the abridged version? There is no abridged version. It's a lot at one time. To get a free copy of your credit report, right? Or just to get a free copy, you can go to www.annualcreditreport.com. And I did reach out and ask, and they did extend it. You can get one free copy of your credit report every week until December of 2022. For those of you who didn't know, that was supposed to expire in April. But due to the nature of everything going on, you know, everybody after COVID apparently has bad credit. They extended it to December. So you have until December to really use this. Pull your copy of your credit reports. You're literally not doing anything else. The only way you can even start this journey is if you pull copies of your credit report. Now, if you just want regular copies of your credit report, you can always get a credit monitoring subscription with this, which is something I recommend for those of you who have goals in mind. Like I plan on buying a house in 2 years. This is a way for you to monitor your progress. Some banks provide credit scores and reports for free. It really just depends on your bank. And then the bureaus, you can also reach out to each bureau, each third-party reporting agency, and you are entitled to one free report from each of these companies a year. Now, we talked about how there are 3 main credit reporting agencies, right? Equifax, Experian, and TransUnion. I call them the big 3. We all know who they are, but there are also some third-party reporting agencies. So I'm going to pull up, I have a list that I'm going to pull up for you guys so that I can show you what the third-party reporting agencies typically look like. Let me see if I can pull it up for you guys so I can show you guys. And obviously for Instagram, I'm going to read some of it out. Now, there's a lot of third-party reporting agencies, a lot of third-party reporting agencies. So it's important that you understand that this is not the kind of like the end-all be-all. I'm just kind of showing you guys what I see most often. Let's say that. This is something that I got during my studies. Let me see if I can share this screen with you guys. Share screen. Window. Here we go. All right. So this is a PDF that I got, back, I think 2 years ago. So this is about 2 years accurate, right? But I mean, the information never changes if you want me to be honest with you. Some companies were bought out by others, but this is a really accurate list. So third-party reporting agencies are the companies that provide the information to the credit bureaus, right? And the reason why the credit bureaus don't do their own information gathering is because it's a lot of information. Like, for example, your LexisNexis. Anybody who has ever pulled their LexisNexis know that it has a lot of information that you do not, the regular bureaus don't need. It has, like, if you've ever held any kind of licensure, like if you're a barber or a doctor or a lawyer or anything like that, that's going to be on your LexisNexis. It records bankruptcies, any kind of insurance claims. It reports health insurance risks. Like, it reports so much information on you, but the third-party reporting agencies, they can hold all of that information and it's okay. But the big 3 don't need that. They don't need to know how many insurance claims you filed in the last year. They don't need to know how much of a high risk you are for health insurance. They don't need to know if you hold licensure or not. That's not what they need it for. The big 3 only need information that's going to lead to, are you going to get this loan or not? However, LexisNexis also provides information to people like law enforcement. There are some third-party reporting agencies that are used for background checks. Clue Auto is used when you go to apply for car insurance. Clue Auto is used to determine how much your car insurance rates are going to be. And all of these are considered credit reporting agencies or CRAs. Tenant screening services, for those of you who are looking for places to rent and you're wondering why you keep getting denied, pull your credit and then you can pull these as well. Tenant screening, Contemporary Information Corps is one of them, or CIC, and then like CoreLogic Rental Solutions is another one. If you want a copy of this PDF, it is available for free inside the Facebook group and the group files. The name of the Facebook group is scrolling across the bottom of the screen if you guys are watching on anything else. And if you guys are on here, the name of the Facebook group is called Plugged in the Credit Clubhouse. If you go to Facebook and search the Money Plug, LLC, and go to groups, you'll be able to find the group there. And again, it's available for free in the group files, as well as like some of the letter templates, not all of them. Now, before we move on to this section right here, go back. Ooh, girl, look at me knocking shit over. Wait a minute. Before we go on to the consumer credit protection laws, it's important that you guys understand something about this section in particular, right? When it comes to the consumer credit protection laws, it's important for you guys to get it from the horse's mouth. A lot of people would be like, oh, well, the FCRA says this, and they will manipulate the words that are there to try to convince you it says things that it does not. I often see this with a lot of those people, and this is no shade. This is just the truth of the matter. People who be like, oh, well, it's illegal for medical debt to report to the credit bureaus. That's not accurate. And a lot of times they'll even pull up the FCRA to try to manipulate you into seeing what they're trying to show you, right? It's not true at all. And it's actually in the FCRA that it's completely legal for medical debt to report to the credit bureaus. It's just how it reports that is heavily regulated. Now, if you are interested in learning about these different, the different consumer credit protection laws, there are a couple books that you can get straight from the FTC. This is one of them. This is the FCRA. It's just a hard copy of the FCRA. This is the most recent version, though I do believe with some of the changes, we should be getting a new one pretty soon. But this is the most recent version that I have access to anyway. Now, I know that they're not sending these out anymore, and I kind of already have the ones that I have designated to people, but I did provide a PDF of this exact book in the Facebook group files last week. So if you guys are in the Facebook group, if you're watching from the Facebook group, you can download it from there, but I highly suggest that you guys pull this up. Just make sure it's the purple copy. It's color-coded because there were different versions, right? This one was revised in September of 2020. So you want to make sure you get the purple one. Now, I do not have a physical copy of the FDCPA, which I'll talk about in the next slide, but that one is blue, if I'm not mistaken. The copy for the FDCPA is blue. That one is not available in the Facebook group. I'll put it in there for you guys later, but it is very important that if you are entering the credit repair space, whether you are trying to be a credit repair specialist or if you're trying to repair your own credit, it is very important that you understand these consumer credit protection laws, because these are what get you deletions. These are what get your late payments update to paid as agreed. These are what get you, the things that you need to get done to achieve the goals that you're trying to achieve. Buying the templates is only a portion of what is required for you to do if you really want to make this shit work. And honestly, if you understand these laws, you won't even have to buy templates. You could draft your own letters. Now, I know that when you guys look at it, it's going to look like gibberish, right? But all it takes is for you to sit down, study, and ask the right questions. The FTC provides a lot of information for free for you guys online. So ftc.gov or consumer.gov. Has a lot of information for you guys so that you can do these things yourself. As a credit repair specialist, I can be honest with you when I say you don't need to hire a credit repair specialist. 9 times out of 10, you hire one out of the fact that you feel as though you don't understand, or you feel as though you do not have the time to do the things that are required to make these things happen. However, even if you hire a credit repair specialist, it is really important that you guys understand these laws, because you need to understand what they're doing in the background. That way, if they say something that sounds crazy or unbelievable, or for a fact that's wrong, you can call them out on it. Because, like it or not, this is a shady industry and you have to protect yourself. So the first consumer credit protection law that you want to know is the FCRA. This is the overall law that actually encompasses a lot of these. The FCRA, or the Fair Credit Reporting Act, governs the credit reporting agencies to ensure accuracy, fairness, and privacy of the information that they are providing to the bureaus, right? To the consumers. So they have to make sure that your information is safe, that not everybody has access to this information, right? That's where, remember we talked about the law of permissible purpose. They have to have a reason to pull your credit. Everybody just can't see it to be seeing it, right? It's nobody's fucking business. So this is them ensuring the privacy of the information, as well as things like HIPAA. HIPAA is actually inside of the FCRA. They refer to HIPAA in the FCRA and how your medical debt is allowed to report to the credit bureaus, but in a very specific way. They're ensuring your privacy. Now, the FCRA also governs the fairness of, how information reports. Now, put an asterisk on that, because we all know that there's a such thing called systemic oppression, right? And so put an asterisk on fairness, but they try to provide the information to the bureaus in an unbiased way so that they can get the most accurate information about you without prejudging you based off of things that have no bearing, like race and shit like that. And then accuracy. This is the part that you guys really need to focus on for those of you who are rebuilding or building your credit. Any information that is reported to the consumer reporting agencies, this goes for third-party reporting agencies and the big three, right? Any information reporting to them needs to be 100% accurate. If anything is off, if dates across the bureaus are more than 30 days apart, if an amount is even a penny off, you can use that inaccuracy to try to get that account removed, updated, whatever it is, because there is a law that specifically states it is illegal to knowingly report inaccurate information to the bureaus. So this is where the dispute process comes in, and you go through that whole thing to try to get the information either updated or removed. But it's very important that you guys understand the SCRA, or at least have a resource where you can go back and refer to it. I'm not saying you have to memorize it like I've tried to. The next one is the CROA. So for those, or CROA. For those of you who are hiring credit repair agencies, this is really important. This is the Credit Repair Organizations Act. A lot of people like to think that credit repair companies are not regulated, and that's not true. There are state and federal laws that apply to us. And so CROA is the federal equivalent of what we are allowed and not allowed to do. For example, did you know that it is illegal for a credit repair company to tell you to commit fraud in the act of repairing your credit? So for all those credit specialists who are on social media telling you guys to call the credit bureaus and say that the inquiries on your credit report is fraud, they are breaking the law because that is illegal. You cannot commit fraud during the repair of your credit, and them advising you to do so is a violation of the Credit Repair Organizations Act. If you feel as though a company has violated CROA, obviously always go to the company first and be like, what the fuck, man? But then, report them to your state's attorney general's office. The FCBA, or the Fair Credit Billing Act. We actually just recently went over this on my TikTok page when we were talking about removing or updating late payments. The Fair Credit Billing Act protects from unfair billing practices for those open-end accounts like credit cards and things like lines of credit. And so, for example, one of the pieces of the FCBA, and a lot of people don't know this because you don't know the FCBA, but you can manipulate the FCBA in your favor by saying, because there's a law that specifically states, right? It's in the FCBA, and it says that if a company cannot prove that they provided you a copy of your monthly billing statement no less than 21 days before the payment is due, then they cannot legally report a late payment for that month. Now, for those of you who follow those credit repair specialists who'll be like, it's illegal to report late payments, and here's where it says it at. This is one of those commonly misinterpreted laws because they'll only tell you the first part and not the additional pieces. And so it's really important that you understand it is not illegal to report late payments. It's only illegal to report late payments if they cannot prove that they gave you a copy of your monthly billing statement no less than 21 days before the actual payment is due. FACTA, the Fair and Accurate Credit Transactions Act. This act stipulates the requirements for the privacy and all that stuff and limits the way your information can be shared. FACTA is where a lot of the identity theft protections come from for like the different credit cards and things like that. This is also why you are able to get one free copy of your credit report a year from each credit reporting agency. It's because of FACTA. If you've ever been a victim of identity theft, I highly suggest that you read FACTA. If you are trying to remove information on your account based off the fact that you are a victim of identity theft, you have evidence to substantiate your claim, I highly suggest that you read FACTA just to know what your rights are as a consumer. Now, one that I didn't put on, I guess I forgot to put that slide in here when I was putting this one together, but the FDCPA is the Fair Debt Collection Practices Act. This is the one that we've been talking about most recently on my TikTok account. The Fair Debt Collection Practices Act outlines what debt collectors can and can't do to consumers. These are your protections against debt collection companies. It talks about how it's illegal for debt collectors to harass you and what is harassment exactly, right? It talks about how they're only allowed to call you during specific hours in your time zone, not their time zone. It talks about how debt collectors cannot threaten you. It's illegal for a debt collector to threaten you with any kind of action that they cannot then pursue. So for example, if they call you and be like, well, we're going to repo your car. Well, I'm going to repo your car if you don't pay this bill. You're not going to do anything. If you are, well, again, remember, this is for military people. So if you are in the military, the SCRA prevents you from immediate repossession because they have to go through courts to get it. So the court has to give them permission to repossess your vehicle. So if they call you saying, we about to come take your car, that's a lie because you have to go through the courts to do so. A judge has to give you authorization to do that. That is a threat. It is illegal to threaten somebody if you are a debt collector. Talking to you very abrasively is not necessarily illegal, but if they start cussing at you, did you know that's illegal too? Did you know that if you tell them to stop calling you and they continue to call you, that is illegal as well? And you are entitled to no more than $1,000 for each infraction of the FDCPA. This is why it is important for you guys to know this information. Like, I've had so many people on that video where I posted the script on TikTok talk about, damn, if only I'd have known this a week ago. Damn, if only I'd have known this a month ago. Or where was this when I needed this? It's very important for you guys to know this information, whether you're hiring somebody to take care of this stuff for you, whether you're doing it yourself. It's really important for you guys to get this information. And you want to get it directly from the source. So you want to reach out to ftc.gov or consumer.gov, and they have a lot of information for you guys there that will break this down for you, even give you PDF versions of these laws and things like that. Now, this next section is specifically for my military people. The Servicemembers Civil Relief Act has a lot of really good information for you guys. Now, I know, whenever I speak about the military experience, right, I really want to caveat this with, I only know the Army experience. I was only ever in the Army. I have never been in any other branch. So if this is not the same for you, I apologize. I can only speak from my experience in the Army. Now, when you first join the military and you get to AIT, like that first Saturday is spent in like a finance brief, and it sucks. The shit's like 8 hours fucking long. It's monotonous, a bunch of slideshows and things like that, and it fucking sucks. Even after that, I feel like I didn't learn anything. After completing it, I didn't learn shit because I still managed to run my fucking credit in the ground. So for those of you who are in the military, even if you have, or even if you're soldiers or sailors or airmen, even if they have done that finance class, I still think that you guys in the military, I think they call it leaders time training now. It used to be called sergeant's time training in the Army. But whenever you guys have LTT, I really think you guys need maybe take one of these classes and really sit down and break down the SCRA, or have somebody come in. I've done it. I do it for free. I go in and I talk to these units about the SCRA and their benefits, because this benefit alone could help so many service members. When your soldiers, sailors, airmen are not focused, the job is not getting done. The mission is not getting complete. And so when there are financial problems at home, I can guarantee you that your soldier is not there mentally. And if they're not there mentally, mistakes can happen and people die. So you want to make sure that your people, right, the people you are leading have all of the tools necessary to ensure that when they're at work and they're with you 1,000%. And this is why it is very important for you guys to make sure that you're providing more than just what they need to do their job, right? When you are in the military is not just a job, it's your life, it's a lifestyle. And so you need to make sure that every aspect of their life is addressed and is handled before you can even focus on the mission. So the Servicemembers Civil Relief Act used to be called the Soldiers and Sailor Relief Act of 1940. They changed the name once we started getting all these other branches and shit, right? So they wanted everybody to feel included. Now, if you look under the title, it is Title 50, of the U.S. Code, Section 3901 to 4043. Look it up. There's a lot of information in there. I'm only going to take pieces because I've already been talking to you guys for a really long time. And not to mention, I'm only going to talk about the parts that I feel are the most important, I guess, if that makes sense, things that actually benefit you guys in the immediate sense of the word. Now, the SCRA is a federal law that provides protections for military members and as they enter active duty. It covers things like rental agreements, security deposits, prepaid rent evictions, installment contracts, credit card interest rates, mortgages. It protects you from so much, and it also provides a lot of benefits. Now, for a lot of this stuff, and as we go through over the benefits that I feel like you need to know the most, for a lot of this stuff, it says that it only applies to debt that you accrued before your military service and then entered military service with. However, there are some lenders who will allow you to do this with debt that you got after you got into the military, but that's another conversation we'll get into in a second. Now, this is the definition of military service that they provide in the U.S. Code, right? Military service is defined under the SCRA as including full-time active duty members of the 5 military branches. They have not added Space Force yet. Reservists on federal active duty and members of the National Guard on federal orders for a period of more than 30 days. Now, I would like to pause right there, right? When you guys are reservists or National Guardsmen, right? Technically, every time you enter onto orders, so AT orders, if you are activated for an emergency or if you're going AGR, or I don't know what the Navy call it, but when you're going full-time guard or full-time reservist, every time you enter into that service, you can invoke your SCRA benefit. And I'm going to be 1,000% honest with you. If a lender ain't calling and asking, okay, so when is this going to be over? Technically, if you don't update it, you can kind of keep your benefit for as long as you need to. And we'll talk about these benefits, but it is really important that you guys specifically understand it. Because when you're active duty, obviously you're active duty all the time. But when you are a National Guardsman or a reservist, you are only active duty for certain periods of time. And so those periods of time are covered under the SCRA. Now, Other qualified individuals, right? So other people who can benefit from the Servicemembers Civil Relief Act are dependents. A dependent is defined as somebody who you have provided financial support for the past 180 days. And you have to be able to prove it. You can't just say, oh, I pay my mother bills. You got to be able to prove that you paid your mom's bills. Shit. Alexa, stop. All right, we have to speed this up. Alexa, set a timer for 10 minutes. So you have to be able to provide evidence that you are providing financial support for these people. Now, in some instances, the SCRA also applies to people who have co-signed with you. So if you've co-signed on a loan for your girlfriend or co-signed on a loan for your mom or something like that, some of these benefits or protections will extend to them. And again, the SCRA protections begin on the date that you enter active duty military service. For military reservists, protections begin upon receipt of certain military orders. Please, please, please go back and look at this if you are a reservist and a National Guardsman, because it outlines which orders you need to have in order to really invoke your SCRA right. Oh, okay. So we're still talking about the SCRA for a second. So we're not going to get to credit building. I'll probably come back and go live a little bit later so that we can talk about that for a second. But there we go. Let's talk about the SCRA a little bit. So there are more benefits to the SCRA other than, you get out of certain stuff. What stuff do you get out of? Like, how does it work? Now, the first perk that I think is the most important is the 6% interest rate cap. If you are active duty military or on active duty military orders, then you can invoke your SCRA benefit to lower any interest rate that you have to 6%. And I'll give you guys a personal example. This is me telling my business, right? But in 2016, I bought a car. In February 2016, I bought a 2016 Kia Soul. It was brown. This was a little while after I got married, and my last name is Brown, so I bought a brown Kia. So don't judge me. But my credit was shit at the time, like shit. My interest rate was about, I want to say like a 22%, maybe 24. My interest rate was terrible, and my payments were ridiculous. But I needed a car at the time. I needed a car to get back and forth because I was working. Now I was working on an active duty packet. I was trying to get back into the military. I had gotten out in 2014, and I was trying to get back on active duty service. I was just a reservist at the time. Now, I bought the car in February. In July of 2016, I got back in the military. And when I got to my first duty station in September, I found out about the SCRA benefit through a brief that I went through Army Community Services, or I think it's called as ACS. And they was talking about the SCRA, so I did some research. I called up the company that I bought my loan. Shout out to Scopes Financial. But I called up the company. I said, hey, I'm on active duty orders. And they said that I can lower my interest rate down to 6%. Y'all, not only did they lower my interest rate, but if you lower your interest rate, no matter how long it's been, when you invoke your SCRA benefit, any payments made during that time that you were active duty, right? Any payments made they will adjust so that it applies to your principal. Like, does that make sense? So all the payments that I made during that time period where I was active, they took those, and you know how most of it was going to interest, but my interest rate was 22%. They lowered the interest to 6%, calculated what my payment was supposed to be, and anything over that, they applied directly to the principal of my loan. So it also helped me pay my car off earlier. So if it goes, now this goes for credit cards, this goes for cars, this goes for mortgages, student loans, anything that has an interest rate on it, right? If you are active duty military, or if you are a National Guardsman or reservist, you can invoke your SCR benefit for any debt that you got before you got on active duty. Now, this is unofficial, but there are some companies out there who will allow you to invoke your SCRA benefit, even if this is debt that you got after you joined the service. And so what I typically tell people for that, right, instead of using your contract orders, or let's say you can't even provide your contract because you have no idea where it was, you've been in the military for so long, what you can then do is you can do a verification of service memorandum from your commander or your command team. And what they will do is they will verify that, we can verify from this date to the present that this person is still serving and they are not scheduled to leave service until whatever it is your ETS date is. And usually that'll start, like, their beginning date will be when you got to the command, because that's all they can verify. They don't know what the fuck you were doing before that. And so they'll put that from the time you got to the command to the present, they can verify that you were in the military. And so a lot of people will use that memorandum for record, or those orders, right, to invoke their SCRA benefit. And that allows them to invoke the 6% interest rate cap, even though this is debt that they got after they technically joined the military. So that's just a tip. Now, not everybody does it. I'm going to go ahead and say that now, but It never hurts to try. I always tell people you never lose points for trying. Now, for mortgages, when you invoke your SCRA benefit, which caps your interest rate for your mortgage at 6%, it's for the entire period of your military service and then for 1 year after your military service. So this is a big benefit that not a lot of people know about. But if you buy your house and your interest rate is higher than 6%, why not invoke this? And it'll also cover you for that first year. First year after you get out of service is hard for some people. So, this could actually be a huge benefit for most families. Now, what I will say is if you're doing this for your mortgage, right, after that year, make sure you let them know when that year is up, because if it comes out that you didn't update them, they could try to backdate all that stuff, take you to court. It's really messy. So when it comes to your mortgage, make sure you keep them people up to date about when your 1 year is up. Now, again, the eligible debt, it's specifically, I'm going to read to you specifically what it says. Credit cards, automobile, ATV, boat and other vehicle loans, mortgages, home equity loans, and student loans. Now, when it comes to your student loans, this is a fairly new addition. This wasn't added until 2008. And so this is for any debt. So for federally guaranteed student loans that originated before August 14, 2008, such as student loans that originated under the FFEL program and direct loans from the Department of Education, the service member borrower is not covered by the SCRA. So if your student loans are before August 14, 2008, you are not covered. Anything after that is covered under the SCRA. Protections against default judgments. This is like when someone's suing you, so if a debt collector is suing you, they have to go through the court and there's a certificate they have to submit. It's you can easily get one on the website, even like things for like custody, child support, things like that. Anything that requires you to go to court for, they have to do a thorough search to check your military service. And if it is found that you are in the military, you cannot get a default judgment entered against you unless you get more time to respond. They have to do more to contact you, right? Or to attempt to contact you. And then if you're out of the country, you obviously get more time to respond than what is normally allotted for people who are in the same city and state. Non-judicial foreclosures. I really want to read this verbatim because this could apply to a lot of people who have entered the foreclosure process. All right, so during a period of military service and for 1 year after a period of military service, a creditor must get a court order prior to foreclosing on a mortgage. This is a strict liability section of the SCRA, and a person who knowingly violates this provision may be fined and or imprisoned for up to 1 year. For those of you who have had homes foreclosed against you and there was no court notification or anything like that, you think they violated this, please report them to your state's attorney general's office so that something like this does not happen to other military people. Because I don't know if you guys remember, and this kind of leads into the next slide, which it talks about repossessions, but Wells Fargo got into a lot of trouble a few years ago for illegally repossessing the vehicles of deployed service members because they did not, they didn't follow the guidelines that the SCRA has, which requires you that, y'all got to go to court before and verify that this person is in the service before you can, and then the court will tell you whether or not you can repossess their shit. But so if you are a victim of an illegal repossession, you are entitled to, damages. Just gonna go ahead and say that. I'm just gonna put that out there. You are entitled to damages. So if you can prove that your repossession was illegal, then, you can get those damages. But definitely you want to look at an SCRA breakdown for more information. This also goes for rental termination. So if you are evicted, same thing. They have to go through the courts and you get more time to respond and things like that. As well as, I don't know if any of you are familiar with the military clause when you are renting a home or an apartment or whatever the case may be. The military clause states that in the event of you receiving orders, let's say you get orders somewhere else, they have to let you out your lease as long as you give them no less than 30 days notice. They have to let you out your lease with no penalties. That means you don't have to keep paying until they find somebody to take over your lease or anything like that. You get out of it scot-free as long as you give them enough notification prior to you moving out. This also goes for, how when you guys have storage units and you don't pay, they can't just sell your shit. Right? They have to do the same thing. They may not enforce the lien without a court order, right? During the service member's period of military service and 90 days after your military service expires. But those are the top benefits that I think you guys should know regarding the SCRA. Now, I know this was a lot of information and some of it might not have applied to those of you who watched. I do want to thank you for watching. I want to go over credit building, but I got something I got to do in like 5 minutes. So what I'm going to do is I'm going to end this live. And if anybody wants to go back and watch it, it is available on YouTube, Instagram, and Facebook on both the page and in the Facebook group. However, I'm going to be going live again tonight, and we're going to be focusing on credit building. So any credit building tips or that you guys need or whatever, if you guys have any questions, come in the Facebook group. I'm going to start a thread so that you guys can put them under there so I can make sure that I address them if you can't stick around for the live. And I'm going to make sure that I answer all of your questions regarding credit building specifically. So we're going to be talking about that. I definitely want to thank you guys for, all of the support for the troops and things like that. I know from Memorial Day, Alexa, dismiss. I know Memorial Day is hard for a lot of people. It's hard for myself. And the giving back that I do, a lot of the giving back that I do for the military is due to the fact that I lost somebody close to me during our service. And so I definitely want everybody to know, if you are a veteran, if you are struggling today, you are not alone. You're not the only one. Please reach out to somebody close to you because you matter to somebody. Even when you think you don't, you matter to somebody. I want to thank you guys as always for all the support you guys show me. And if I don't catch you guys later, right? If you don't get to catch the live later, you guys know what I always say. Live every day like it's your last, but pay your bills and wear condoms just in case it's not. And I will see all of you in about, I want to say, give me 9 o'clock. 9 o'clock sounds like a good time, right? So 9 p.m. Eastern Standard Time, I'll be back live so that we can talk about credit building. All right. I'll see you guys later.